What's up, guys? It's your boy C's. So I'm going to go over the market structure, which this is key, major key. Market structure is how you're going to be able to tell when you're right, when you're wrong, what to expect, and how to react when you see these things. So if you are in an uptrend, right, you're going to get higher lows. The lows, the pullbacks, they're higher than the previous one. You're also going to get higher highs. Why? Because you're uptrend. Up, high. High as a kite. So you're going to get a higher high, a higher low, another higher high, another higher low, another higher high. Right? So when you're doing this higher high and this higher low, you're expecting, if it is going to continue, you want it to break this higher high, right? You want it to break this structure, so to speak. If this line goes up here and starts to respect the structure, you might be looking for a sell, for where it's going to shoot down, right? So in an uptrend, you want higher highs, higher lows, higher highs, and in a downtrend is the inverse. So you want to have lower lows, right? The last low was over here. This low's lower than it, so this is a lower low. You want lower highs, prices dropping down. So when it's pulling back, it's a lower high, right? Same thing, lower low, lower high, lower low. And again, when this line is coming down, you want this line to break structure, market structure, right? So that way that lower, so you can form another lower low and another lower low, right? So our goal is to buy on the higher lows. You want to buy on these higher lows, right? You want to buy low, sell high, right? So once you buy on these, you're looking at this. You want to take partial profits, or you could take your profit and be done, or you could wait for a retracement depending on the time frame, and then get back in that trade at a lower risk, right? Once it breaks this, instead of having my risk down here, I'd have my risk below this, because I believe it's going to break structure and create a higher high. Same thing with the lower low. If you were getting in on a sell, you're not getting in on a sell here. This is how retail traders lose money, right? So what they'll do is they'll get in on a sell here. Price is going, oh, it's going to keep dropping, man. It's going to keep dropping. I just heard on the news, economic reports, stocks are doing bad. They'll figure out whatever, all this other stuff to get in, entice them, and then they're going to bring it up against them. Either A, they're going to get stopped out, or they're going to get account blown, or they're going to get scared, because once you're in the negative and you're in the red, you're scared, so they may stop their own trade out, right, before the market actually goes the way that they know it was going to go. It's going to drop. Yeah, we can tell when it's going to drop. Just want to get in at the right time. So you'd be selling here instead of here, or even here. You know what I mean? You want to wait for that market to pull back. If you miss the move, you trying to get on that move is just, the market only moves a certain amount, at a time. So trying to get in and be like, oh, it's going to go straight down, that's just not how the market works, right? So we're expecting to get in the sell here and for it to go past market structure, okay? That's what you're looking for. That's how you're going to make money. When you can realize what market structure is, you can find good entries, and you want it to break it. Are you going to be wrong? Hell yeah. No one's going to be 100%, 90%, 80%, any of that shit. I mean, you can be, but that's why you need multiple influences. You need more reasons as to why it should break that structure, the why it should continue down. The more reasons you have, the better your trade is, right? So in a nutshell, that is market structure. I'm going to go ahead. I already uploaded this file, and I put a picture. If you guys want to download that, print it, whatever, so that you have it, especially if you're new, market structure is major key. I'm going to show you on live charts some examples, okay? Yeah, this probably confused the hell out of you guys here. Alright, so let's go ahead and get rid of all this. Clean chart. Okay, so what we're going to do is we're going to identify market structure. I'm going to go on a higher time frame because it is a little bit easier to see market structure on a higher time frame. smaller time frame will have a lot of noise in it sometimes, but you'll still be able to see it, right? So instead of doing an Elliott wave, I'm just going to do it by this, right? And this is something you can do when you're first starting out if you really need to be able to visualize the market structure, right? So this is actually going to be your homework. I want you guys to go to some charts and mark it up as the way I show you. Okay, playing with me. All right, here, there, here, there, pull back here, go there, pull back here, pull back there. All right, and that's up. Maybe I should make it a little bit brighter for you guys. Yeah, let me just redo it for you guys. Can't hurt, right? See it twice. Trend, color. Yellow. Alright, there we go. That's a lot easier for you guys to see. I'm literally just going from the top to the bottom, top to the bottom. Alright. I know some of you guys are probably wondering what this line is that I have on my chart. It's actually exponential moving average. Not sure the structure of this video, if you guys already seen it or not. Just don't pay attention to it. Actually, I'll put it on, I'll move it for this example. All right. So we're going to go ahead and identify our higher highs, our lower lows, our lower highs, our higher lows. Did I say lower highs? Lower highs. Sorry. Let's go ahead and put this on white. Nice and bright for you. Lower low. Do high. Here, lower low down here. Alright. Boom. There. Low. Okay. Right. You can Control C and then Control V, or if you have Mac, Command. That's extra space here, so look at all ugly. Definitely gonna redo this one over, but I want you guys to have some content to go through. I'm excited. We have some of our old members back. Super excited to be working with you guys, bro. Honestly. Well, let's go to another. Low. This is actually a higher low as well, right next to it. So I'm just going to grab this over here. And there's another one over here. All right, let's get this knocked out. This is a higher high up here. This is a higher high up here. This is actually a lower high right here. All right. So what I did was, and this is what I did when I first started, to make sure I'm recognizing structure, right? So this is a lower low. It formed a higher high in comparison to this. If you're looking at this, this was the previous lower high. Normally you want to break that before saying higher high, but we're not focused on that. We're focused on the move up. So I'll just drag the screen over here so you don't even worry about that, okay? Right? So I got a lower low here. I'm going to a higher high, right? So if this is going to be a reversal of the previous trend going up, I'm expecting what? A pullback, and that's going to form a higher low, right? And then I want it to break structure. Where's structure? Right here, the higher high. Boom, draw a line across it. Broke structure, did exactly what I wanted, right? Higher high, pulling back down for a higher low. What do I want it to do? I want it to break structure. Did it break structure? It broke structure, right? Again, here, higher high, down to a higher low. I want it to break structure, right? Did it break structure? No, right? So now I'm looking at the market. Okay, is this going to continue up? Is this a reversal? Is this an M formation? Is this going to shoot down, right? And then it forms a higher low. It didn't form a lower low. So once I've seen that, like, no, we're still in a bullish uptrend, right? Now I'm looking for it to break this structure, which it eventually did. Once it broke that structure, came back down into it, and then guess what? It broke the structure. So knowing your market structures is major key, because you'll be able to notice these points and you'll know where you're targeting, where you want this to go up, right? And something I can, actually I'll take a screenshot of this for you guys. Throw it in the group. Image. So this is a structure. Alright. So, and again, you can utilize your trend lines to once you see, like, let's say you miss this move here, right? Let's say you miss this move here, right? You could even take the trend line that's already there that we use to market, and go like this. As long as it's not crossing through the bodies, once it crosses through a body, it's considered broken, right? So we're touching all these wicks, kissing the body there, boom. It breaks its trend line. What would I think? I would think it's doing its retracement, right? Retracement, which would enable me to get in a pullback in order for it to go up on another wave up. Okay, so I hope this made sense. I'll have more detailed breakdowns, but in a nutshell, this is market structure.